Hi, my name is Michelle Duford. My company name is DufordCPA. We currently have offices in Kelowna BC and Calgary, Alberta. We are cloud-based accountants and we can serve clients all across Canada. Our video today is going to talk about the types of businesses in Canada. So if you're starting a business in Canada, here's some of the things that you need to know before you start. So this video on tax would not be complete without a disclaimer. This video is not a substitute for professional advice. Please refer to a CPA for advice for your specific situation. So the video today will cover the following types of businesses: sole proprietor, sometimes known as self-employed, and incorporated businesses. So sometimes you hear them referred to as an incorporated, limited, or corp. Corporation, or corp for short, is what's shown here on the slide. So while this video is talking about business in Canada, it's not going to discuss other income earning ventures like rental properties, investment, real estate speculation, or partnership. It also doesn't cover any topics related to GST or HST. But we do invite you to watch our separate video that focuses solely on GST, HST, also in this channel. When we talk about the two different kinds of businesses, typically businesses start out as a sole proprietor. It's the easiest business to start, and there isn't a lot of paperwork required. Go out there, you start sell your goods and your services, and you start to make money. However, there is a few things that you should think about before you get your business name and start getting the business cards printed. Get a separate bank account for your small business. The temptation is huge to commingle your business and your personal funds in the same bank account because of the bank fees. But at the end of the day, it's way simpler in the long run to have two separate accounts, one solely for business and one solely for personal. The same thing would apply with credit cards, but to a lesser extent. At a minimum, we recommend that you have a separate bank account. Some things that people don't consider is if you drive for Uber or Lyft, if you run an Airbnb, if you do pet sitting for Rover, or you deliver for Skip the Dishes. If you do any of those things, you are likely considered to be a sole proprietor, and you need to keep track of your income and your expenses and report all of these things as a schedule on your personal tax return. Fortunately, as a sole proprietor, you aren't required to file a separate tax return. It's merely a schedule on your existing personal tax return. CRA does give you a little bit of a leeway and gives you an extended filing deadline of June 15th. But your taxes are still due April 30th. So it usually is a good idea to get yourself organized early in the year and connect with a good accountant or bookkeeper to help you get your bookkeeping done and your taxes filed on time. One of the big things with the sole proprietor is there isn't, unless you have separate insurance for your business, there really is no legal liability. The business is you. You are the business. That's why it's called a sole proprietor. Oftentimes when businesses get a little bit bigger, they think about incorporating. And when they incorporate, then of course you have a corporation. So some of the benefits of the corporation, it is a separate legal entity. So to be a corporation, you have to have at least one shareholder. You can be a private or public corporation, but we're not really discussing public corporations in this video, so we're focusing more on small business. One of the benefits of a corporation, it can exist outside the lifetime of the shareholder, and shareholders can change, but the businesses still continue on. So a business can be easier to sell when it's a corporation. When you have a corporation, because it is a separate legal entity, it does have its own separate tax return. It's a corporate tax return, and its filing dates typically are at the end of the month and any month of the year. Sometimes it's set when you first set up your corporation, but as long as you haven't filed a tax return yet, you can change the dates on that. As with a sole proprietor, you want to have your own bank account. And you're going to need to have a complete set of books. So you're going to have to connect, or you should connect with a bookkeeper or accountant to get your bookkeeping done, unless you really know what you're doing, and then you could probably do your own bookkeeping. If you're going to hire staff, you might have some payroll considerations. Because of the complexity of that topic, it's not covered in this short video today. But if you do have any questions about payroll, please don't hesitate to contact us or your bookkeeper or your accountant. A lot of people understand that when they incorporate it, there's some potential tax savings. And oftentimes that's the biggest reason that they actually incorporate. Although for some firms, the limited legal liability is a bigger draw. Think of somebody like in construction or some kind of design services where there is a significant amount of liability. What happens is if the corporation is sued, it's typically only the assets in the corporation that are at risk. Although for some types of professional corporations like CPAs, doctors, and other professionals, the corporation only provides tax savings. It doesn't provide them the limited legal liability. So a discussion on small business corporations in Canada would not be complete without a discussion of personal services businesses, or PSBs for short. A PSB is really an incorporated employee. This is a situation where a small business, usually with a single shareholder, and it has one large client. So usually this contract, 6 months, 9 months, a year, sometimes 2 years, but usually not that long. You work for one company. Again, you have the term consultant. CRA doesn't recognize this as a regular active small business. For CRA's definition, one of the things that's critical is that you have multiple clients and you also have multiple employees. So what does this mean? Well, they limit the amount of deductions that you can have, and you are assessed at a higher tax rate. So it's really important that if you think you are a personal services business, that you connect with a CPA that's knowledgeable in this area. And they'll be able to help you structure things to keep your tax rate at least reasonable and to give you some comfort that you're doing things right should CRA come back later to question your return. Again, if you are a personal services business, it is very, very important that you talk to someone, because by not talking to a CPA, at some point, you may find that you're paying a lot more taxes than you had expected. Thank you for watching our video. I hope it helped you understand some of the issues that you might encounter when starting a small business in Canada. If you have any questions, our contact information is showing here on the slide, and we encourage you to visit our website. If you're interested at all in moving to the cloud, we work with both QuickBooks and Xero, and we would love to take the opportunity to show you how moving your business to the cloud can help you with better decision making, as it does allow for almost real-time accounting information. Thank you again, and please watch this channel for more information on small businesses in Canada.